Hey guys, welcome back. Johnny here, and if this is your first time watching, I show you how to make money in the stock market. So if you like that kind of stuff, feel free to subscribe to my channel and click the little bell so you don't miss anything. Alright, so just like the title says, today I'm talking about Main Street Capital, or ticker symbol MAIN, and why I think it's a strong buy. So let's get into the video. Now, for all of you that don't know, right off the bat, Main Street Capital has been paying a dividend every single month for the last 7 years. Now, that is quite some time. Now, it's not a dividend aristocrat like the 25 or 100 year, but you know what? It's a pretty good stock in general. And let's talk about why. Now, not only do they pay monthly, right now they have a dividend payout of 19 cents per month, which is pretty good. At only $40.60, you can get involved with Main Street Capital. They are a finance investment service, and if for all of you that don't know, that basically means they're a business development company, and they focus on providing customized debt and equity financing solutions. So the CEO is Vincent D. Foster. They have a market cap of $2.5 billion. They have 58 employees. They have a PE ratio that I like at 12.76. They're headquartered in Houston, Texas, the Lone Star State. Founded in 2007, so they're somewhat a newer company. They've been paying a dividend yield of 5.66 for quite some time now, and they have an average volume that's a little bit low at 236,000. Now, because this company has a 5.66% dividend yield at $40, means they're able to pay about 19 cents per month. You add that up times 12, that's a substantial amount of money. Now, you have 10, 20 shares of this company, and now you're talking about making some good money every month. They're 7% higher right now to buy on their 52-week chart, with a low of 34.13 and a high of 41.21. Their averaging price right now was around 38.11, but it's 7% higher, which gives you the $40.60. Now, 6 ratings are saying that it's a 33% buy, and there is a 67% hold. 0% sell, and let's talk about why. Now, on Main Street Capital, MAIN, ticker symbol, guys. I want you to remember that because you're going to want to probably invest in this company. They have been beating their earnings for quite some time. Every quarter since 2016, they have exceeded their earnings per share estimate. Now, they have another one coming up November 1st, but I believe they're going to also just blow it out of the water. Right now, they're at 66 cents per share, which is pretty great. And as you can see, the history down there on the bottom, my last dividend from them on May 15th was for 19 cents. Now, I sold this company around June, just for a couple of months, and then I believe I either recently just bought it or I am anticipating on buying it now in this next video to come. Pretty great company to get involved with. I mean, I do like the company. It has a nice earnings per share. It pays a great dividend. The street rating here gives it a B, slightly below the strong buy average that the street likes. I believe it's a strong buy. They pay a nice dividend. I like that. 19 cents, basically 20 cents. Add a few more cents, that's a quarter. Make a quarter a month off of one share. That's that's pretty good. Now, on here it's saying their annual dividend yield is at almost 7% at $2.83 per year. Now that's divided up into 12 months, obviously. They have a huge market cap to be able to pay their investors, and do some other investment opportunities with that money. They have a target price point of $46.92, almost $47. Now, remember what I just said, though. They're only at $40.60. So that is an incredible target price for this company that I believe they can reach. Some of their highlights on why it's a strong buy: they have robust revenue growth, expanding profit margins, increase in net income, good cash flow from operations, and growth in earnings per share. And their strengths outweigh the fact that they have a somewhat disappointing return on equity. Now, their revenue growth has slightly outpaced the industry's average of 11.7%, which their revenues rose by 19.1%. Now, their gross profit margin for them is currently very high at 84% and has increased from the same year over, with net profit margin of 92%, significantly outperforming against the industry's average. Now, the net income has also increased by 30%, which their net income has increased from $42 million to $55 million. Their net operating cash flow has also increased by 123%, guys, to $9.46 million from the same time last year. Now, despite its increase in the cash flow, it's still growing at a significant lower rate than the industry average of 184%. Now, that's not bad because it is paying a little bit of a higher dividend at almost 5-6%. They also have improved earnings per share by 22% this year compared to last year, and also expecting to increase their earnings to $2.99 versus $2.49. Now, the U.S. capital market industry includes security brokerage, investment banking, advisors, services, asset management, and custody firms. Now, some of the main firm industry leaders is Lehman Brothers, Merrill Lynch, as well as Goldman Sachs, Morgan Stanley, and government-assisted under the Trouble Assist Asset Relief Program, or TARP. Now, Main Street Capital Corp has a net income of $186 million, a net sales of $223 million, price earnings per share really low at almost 13, and a market cap of $2.5 billion. So that is pretty good for its price. Now, as you can see on the chart here, its revenue growth at 16% and its earning yield at 7.83% has put it up in the favorable position on the revenue growth side, as well as being up in the favorable position in the margin and revenue growth side. So, stock at a glance, its growth is a little bit slow. It only has a 2.2 out of 5 star rating, but its total return has a 4 out of 5 star rating, efficiency 4 out of 5 star rating, price volatility 4.5 out of 5 star rating, solvency 3 out of 5, and income 5 out of 5, which is strong compared. It's higher than 90% of the companies that the street tracks. So it has a nice dividend yield, great payout, This is a good company to get involved in, and the equity for the stockholders has also increased by 12%. So people are very interested in this company. They're investing their money into it, probably monthly, maybe yearly, maybe through some type of drip system. But this is why I believe Main Street Capital Corp is a strong buy. Alright, I hope you enjoyed the video. And for more great content, subscribe, click the little bell so you don't miss anything.